Can everyone hear me over here on YouTube? Can everyone hear me over here on YouTube? Looks like it's working. All right, well, welcome everybody. So this is the first coaching mentoring session for the year 2024. And we had a sale on Bookmap right before the event or end of the year here or New Year's, which was great. So the whole idea was that you could get a discount on Bookmap for the year, for the entire year. And it was an annual subscription, get 30% off, and then join the Bookmap Academy and get coaching and mentoring. If during that time you made it from Bookmap Junior Academy into Bookmap Academy, you can get Bookmap for free. If you do that, then we would turn around and then prorate the rest of your subscription for other Bookmap add-ons and products. So it was a good deal that we had for everybody, and hope you guys took advantage of it. Anyway, we're going to jump in here and go through some coaching. So let me get into it here. If you guys are interested in joining the Academy, I do need to show you where that is and what this is all about. Just go to bookmap.com. And then under the More button here, click on it, and then go to Bookmap Academy here. You can read through this and you can apply. It'll scroll you down the page. You can read through it and then apply here, and then you'll jump into our Discord. All right, so let's go through the disclosures and then get into the coaching. General disclosure: all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, so the first coach we have up is Jack. I'll turn the mic right over to him and let him go through Stephen and a few others here.
Good afternoon, guys. How is everybody? Hopefully everybody's doing pretty well. So the first one we've got today is Stephen here. This is a great trade, Stephen, or a great review in general. It's a little bit longer of a review, so you can see there's a couple images here. So what I did was I just covered the first four. I put the link in the chat here if you guys want to go back and take a look at those in general. This was an important concept, Stephen, and you really did a great job utilizing this concept by doing a review of previous days. There's only so much time you get with the markets while they're open. So sometimes you need to go back and you need to review different things, check different strategies, see how things work in different market conditions, bullish, bearish conditions. And that's one of the ways that review is incredibly important. And then when you're reviewing with Bookmap, you're training your eyes and you're really focusing on those different things. You're kind of back testing and you can add statistics to this. So really great job with that concept in general. So really want to call that out. If others do this as well, I'll treat them just the same. It doesn't matter to me. What's important is that you're journaling the process, you're learning the process, and you're kind of migrating through that. As we break down this image, we can see at number one up there, we've got, his intro, his date, his summary, his what he's looking for, his long setup with higher above or higher out of range, and VPOC shifting. So we can clearly see the kind of bias right at the start here for this setup. In the image on the right at number two, CMJ, you can click the link in the chat there and you can open it up on your own. I put a link directly to it for you there, buddy, if you want. If you can't find it, let me know and I'll get it for you. Over there on two, we could see where he's kind of looking at a potential reversal or a potential from an impulse short. He wants to look to get long necessarily. And at that, we can actually see essentially a double bottom with an interior swing high. Some people might call this a W pattern or an upside down M pattern, or there's a dozen different names there. But with that little swing high there, we're going to come back to this because it's a really important order flow concept right there that I want to point out. And to the left of that swing high, you'll notice it was a previous swing low and that there was liquidity in that area underneath. A little lower, Bruce. The band.
This one here?
Yeah, that short band right there. So
okay.
We're going to come back to that in a few minutes here. But that's an important concept because we know that traders were active in those areas. So that helps us with our confluence, essentially. Yeah, Stephen, it is. And then as we get to 3, you can see that there's a structure of resistance, another band of liquidity above. So that gives us a bias when we kind of approach that area with trade. And what you can see in 4 is Stephen's utilizing that bias. He's setting an expectation and he's drawing it out. And this is an incredibly important concept as well. By having a bias or an idea of what the market should do as you go into approaching a trade, if it violates that, then you can take a step back and reflect on what you might have done or maybe what you might have missed, or maybe it just didn't work in your favor. But by having that kind of thought process already, you're looking a step ahead, 2 steps ahead. And you can see that he's looking for it to continue to break above, pull back, retest, and then potentially go further. So it's a great concept there. I annotate this a lot. Actually, I did it yesterday on one of my charts. Really, really great concept here, Stephen. So great thing to see there. As we kind of push forward from here, at 5 on the bottom left, we can see that as we got that big selling pressure down, volume started dissipating. And this could be a good indication of getting that potential reversal, right? Because if you have a lot of selling pressure and then suddenly sellers aren't there, but buyers step in, you can get a good, strong reversal. And that's what he's notating here with the volume. There's a significant decrease in that volume. And with that kind of decrease, you'll often see it in those exhaustion patterns, those double bottoms, things like that, where you might get a little period of consolidation and then potentially get that reversal. So you can really see that volume there. And then as we kind of go towards the next image at 6 here, Stephen, you nailed it. That is, in fact, a flag pattern. You get the impulse A to B, then you get that nice pullback at C in that right image there. It's really what you want to look at. Now, kind of going back to what I mentioned with that band of liquidity that I wanted to kind of call out again, you can see that rectangle there. And if you notice, that's the same area where you notated that you had that band before that I mentioned, and that could provide a very good area for a potential entry or a potential trailing stop right below that area. If you were looking aggressive in this particular case, you might want to be at that arrow, but you might not want to be aggressive. Maybe you want to wait for a break for a trend continuation. So you might want to be above that band of liquidity. Yeah, Stephen, great. It is, in fact, a flag pattern. You actually have several here that are kind of stacked together, and that's kind of what you expect to see in a trend in any direction. Strong impulse down, slight pullback consolidation, strong impulse, slight pullback consolidation, and you're just kind of looking for that. When we actually have a really good trend day, which I'm sure we will sometime in the next couple of days, you'll see that pattern, especially if you kind of zoom out on higher time frames. You can really see, oh, wow, this was a great set of, impulse pullback. So it's the essence of a two-legged pullback, essentially. So it's the way to be on the right side of a trade. Other than that, I didn't go through every image, Stephen, but with these 4, I think you can really see that this was a great overall strategy to add to your repertoire and to make sure that you're kind of looking for and everything. Like I said, if you wanted to be aggressive, that arrow might be the best one in the bottom right there. If you want to be a little more conservative, you might wait for a break of that swing high. It just depends kind of where you're at. But I think that your trailing stop, you want to be below C there. And that's really kind of like, you'll see this kind of conceptually go more and more often there. because you had traders there. And in fact, once we move away, you can see where those traders stop back in, right? You can see the band of liquidity directly to the right of Bruce's circle there. You can see they're still there. There are people still okay with wanting to be trading at that level. So it's a good place to get some support there if it ends up pulling back on you and your bias is still necessarily long. So overall, really great. I really liked everything I saw here, buddy. I'll try to keep some more trades out. If you have more questions on some of these things, let me know, and we'll get you an answer on those, kind of like, is this a flag pattern, or if you have a specific question, just ping one of us. We'll definitely take a look. That way you don't have to leave it in an image like this. He says,
do we want to turn the mic on for Stephen, or did he?
He's posting in chat.
Okay.
It's up to you, though. I know we kind of want to be quick here, so it's up to him. But yeah, Stephen, these are all pretty much the same setups. They were all really kind of going through. That's all right, Stephen. He said he's going to opt out for the mic.
Right.
But that's pretty much all I had here for you. I think that this looked great. I think that you nailed everything you were looking for. If you're doing this in real time, buddy, you're on the right track. Really good job with this one. So appreciate it, man. And that's kind of it for Stephen that I had. Do you have any other questions, Stephen? I see you typing. You're doing great, man. Everybody's really putting in a lot of effort. We can see it for sure. For sure. All right, he said no questions. So let's go ahead and go to the next slide with Crash here. So I scaled this up so the aspect ratio is a little different than what it needs to be. I just made it a little vertically a little better. If you want to see that, you can look at that in the Academy chat here, and you can pull it up and make it a little bigger. It's an ultra wide picture, so just be aware of that. Going to be a little nitpicky on Crash here in general, mainly because he's done a fantastic job. So like in life and any time when you do a good job, we like to move the goalposts on you. So that's what I'm going to do today on Crash a little bit here. He's been putting out great content overall. So there's just a few things that I would personally like to see like solidify out a little bit. And it's just kind of situational, so they might not apply directly. But straight up in number one, again, we can see clearly what his picture is about. It's about his long dead center. Long criteria. He's looking for sell sweeps into sell stop. He's looking for that heavy volume, but also he's looking for that volume to kind of pull back after it kind of gets that large impulse. And he's using market pulse to get this. So now we can see that not only here, but he also puts a date label up at the top too there. It kind of shifted a little bit. It should be up at that white box there. But he's got his date label there. So if for some reason he doesn't have the date on the image title itself, he can always know what day this is, go back and check his historical charts if he needs to. Great concept there. And we know that he's also using the MBO package for his iceberg setups. So if we take a look at 3 in the bottom and the middle, we'll notice that there's a couple of things that kind of stand out from this. And this is kind of something that I found too. As a trader, we kind of are just like normal humans every day. We develop processes and we get into habits. And it's kind of like recognizing your own handwriting. Looking at your images, you generally know what's going on with them. And there's nothing wrong with that. But there does come a time when you go back and you look at something you wrote before and you're like, I have no idea what I wrote. And I think that this image kind of can get that way. One, you can see that there's the market pulse call out at 3 here, but if you look at the timestamp, it doesn't match the one at 4. This is probably just a small little tiny mistake kind of thing, right? However, there's actually a very easy fix so that you don't make this in the future. And it's that the VPI algorithm actually enables you to look at both ES and NQ at the same time so that you can see if those flows are coming across and impacting both. So you can actually check and do both of those if you want, Crash. I recommend doing it. I actually do it as well, but I add the Russell in there as well because I want to see the entire indices and the volume pressure against them. That really lets me know that there's large dealer flows involved in this. And if I can isolate those to, maybe heavy call buying or put buying or something like that, where I can isolate the flows and have a reason for it along with a key level, I'm looking to trade that momentum or trade against that momentum. So I would definitely take a look at that. If you need help setting that up, let me know. It's an easy screenshot to do there. Yeah, Jay Gunn. So Jay Gunn just asked real quick, do you have somewhere that you recommend to learn the basics? He doesn't have the software yet. We actually have a learning center. We'll get that posted in chat for you in just a second. I'm sure Dan will be able to do that. That's the best place to start. And that's Bruce narrating a ton of stuff. Kind of going back to this though, real quick. So yeah, you can see at 3 and 4, we've got kind of a detachment there. It's probably just an annotation issue. And then kind of going forward from there, let's kind of recognize what this trade is. This is a reversal trade, right? And it's important to recognize this is a reversal trade. Now, there's nothing wrong with reversal trades. They're one of the best trades you can possibly take. If you get a well-timed reversal, you can get, 30, 40, 50 points sometimes. So that's impactful. But reversal trades are against trend direction. Whether that trend direction is short-term or long-term, you're expecting the trend to switch. And if you get in on a trend day and you're trying to take reversals, you will notice that you just get tore up. So on choppy days, reversals can be a little bit stronger, but on trend days, you need to be wary of that. So people watching or reading this image, don't just take it at face value and just jump into what he's doing here. Make sure you understand that this is potentially a counter trend trade. It's potentially that reversal style trade. He's not trading with VWAP. He's not trading with VPOC necessarily. He's looking at his specific setup. So be aware of that. And Crash is obviously aware of it. He's the one who's made the trade. So from there, you can see at 5, we get a lot of exhaustion there. And Bruce, you could probably really show the highlights and the exhaustion on the buyer side there. Just above and then slightly to the right there. Now, this tells us that there's not a lot of buying appetite necessarily as those spreads kind of widen and nobody's really hitting that offer. Now, that gives us confluence to potentially the downside. That doesn't give us necessarily confluence to the upside. So this is kind of, again, that counter direction. Now, he's just using ES as a correlation or confluence over to NQ. It's not necessarily his direct one-to-one. And we can see that the consolidation to the right of 5, roughly at, it's hard to see in this image here.
Here?
Yeah, that consolidation, you'll notice that pattern exactly matches the one in NQ. So there is a lot of really good setup here. You're looking for those same kind of consolidation products.
I'm sorry, I'm a little lost. Is it over here, the consolidation?
Yeah, you can see that consolidation.
NQ?
And
Okay.
it directly matches like literally high for low in ES as well. The same consolidation pattern.
Yeah.
So you can see that there is potentially that change in market sentiment that he was expecting. So he's got that confluence going for him here. And then, let's see, what was 6? Oh yeah, that was just a strong impulse down. Kind of going with that strong impulse down. If you look at 6 and 7, that's a 10 handle change in ES and a 40 handle change in a 5-minute period. So that's a strong impulse down, and you're just falling knifing it back up, which again, nothing wrong. Just be aware that there is risk there, guys. So make sure that you have that strategy, you are tested it, and you understand your overall risk and where your stops should be. Below 7 on NQ there, you can see his box there. I'm assuming that his box there is where he's looking to place his trailing stop. And you can see where he wants to leg in above in the pink there. The problem is I don't see strong entry criteria. I don't see a strong entry location. Now, it kind of goes back to that handwriting concept here, Crash. Where is it? Now, you probably know it looking at this image because it was only a couple of days ago. But does the you from 6 months know where it's going to be? Maybe not. So I really would like to see you isolate down your entry criteria. And I'd really like to see you kind of make sure that you're not catching a falling knife. The trend's not going against you the entire time. And kind of isolate the criteria that you're looking for specifically and make call outs to that on your images moving forward. Honestly, though, you're doing a great job. Like I said, this is just me making you do more work. So it's one of those things. I'm sorry you're being punished for doing a good job, dude. Continue doing it. Uh, I hope to have this problem more often with other people too. So, because I'm going to be moving the goalposts forever on everybody. We just want everybody to do the best they can. Aside from that, the only other critique here is there's 7 rectangles on the image and there's no annotations on what they are. I can deduce what they are. They're upper bands of liquidity, potentially profit-taking zones, but probably want to annotate those, or maybe they don't necessarily need to be there, or maybe it was something you were thinking about. Just keep that in mind as well. But any questions, Crash? I know you've got a jet. You had something going on, but that's pretty much all I had for you, buddy. He's typing right now.
Yeah, he's got to go soon.
Yeah.
But yeah, no,
Sounds good, Crash.
he does have like certain criteria. I mean, a lot of times, like he's looking at that falling knife, but it is the trend is to the upside. And this is he's really kind of getting in, and he likes to, which I think is it's great. It's totally fine. He has very specific criteria here. And he's also mitigating the risk. He's only getting in down in these levels when he gets this market pulse. With this very specific criteria, he's only getting in a few contracts, and he's adding in quite a bit more in other areas. So
once he gets his move, he definitely scales in, and you can see the leg in right there. It's just this very specific criteria, because I definitely have other examples where you get very similar stuff, but the trend keeps going down. It's still a downtrend as opposed to the reversal that he's looking for. So really fine tuning those, mainly because this is a very risk strategy, and there's nothing, like I said, there's nothing wrong with risk strategies. I use them all the time, but you really want to what empirical numbers are you looking for at getting in, and try to remove as much subjectivity and discretionary trading to it. But that's just one of those things. And as you get more examples of these, Crash, you will absolutely get there, right? Like the larger the sample size, the more efficient the statistics. It's just kind of how it works there. But overall, it's really great. It's just those little fine little needle things. That's it. Great stuff.
I had one comment for Crash. I think that's really good advice, Jack. Like this really stands out for me, at least. He knows exactly what he's looking for. And there's another element in here I think is really good. A comment that you made is, marking these things up, annotate them, because like you don't. The more that you annotate them, the more that this will come together. The more you'll understand exactly what it is, and others will maybe question you on it. And once you start spending more and more time with some of these, like you'll see things that you may not have seen before. And I think that's a good comment, Jack.
Yeah, you don't necessarily need to put exactly where it is specifically. One of the things that I'll do on some of these types of concepts where I'm kind of investigating or kind of expanding on a strategy is I will literally just take my entry and exit directly from my broker, and I'll just copy that and put it directly on the image. And it goes into a test folder that I just kind of archive and keep track of for that. So you don't necessarily need to nitpick exactly where pinpoint it is. You could just do that, or you could just circle basically where it is, as long as you have a good visual of when you did it, so you can go back and look at it. And this will help too if you are one of those guys interested in making those statistics and really expanding out and getting some in-depth statistical backtesting. But again, just kind of nitpicking. But yeah, Bruce, dead spot on. But that's it for Crash that I had here. AJ, I hope you're here. The reason is you remind me of myself literally a year ago. I was migrating from Footprint over to Bookmap because trading megacaps, trading futures, and trading Footprint was incredibly just mind consuming. I was visually dead at the end of the day. But overall, This is really great. I need to pull this up so I can make it bigger because footprint makes things very small. Give me just a second here. This is the one. So my thing disappeared. There it is. Okay. 1 second. I have technical difficulties. There we go. So kind of briefly going over this, I don't want to spend a lot of time on footprint, but I want people to kind of understand a little bit about what's going on. What footprint is it's essentially a way to track the transactions on the bid and on the offer. And what you can do with this is you can see points of exhaustion, points of absorption, and potential reversal patterns. Now, this might sound incredibly familiar to Bookmap because we look at exhaustion, we look at absorption, and we look at potential reversal patterns. We look at liquidity in the book, which is one of the reasons why I migrated from Footprint to Bookmap, is that I don't need to necessarily have that time and sales window glued to my eyeballs the entire time. So it's going to be a little bit foreign kind of going through this image to users. If you guys have questions on Footprint or kind of what the correlation is between the two, ask in the Academy channel. There's definitely others of us who have used it. I've used it. Bruce has used it. So there's a lot of knowledge there if you have questions on that and how it interacts over and how they kind of mix and match. So just ask questions. Don't be discouraged by what you see here. Kind of going through that though, let's take a look over on the number one there. This is unique. He's got a very clean, and honestly, it's a very, very unique trade annotation from AJ. You can very clearly see the just kind of crisp feel of it. You get the observation, what he's looking for, what he's expecting, and he really notes kind of about the previous push and a retest of this low, and it kind of rejects higher. And he was looking for that rejection, and he's looking for that in the footprint and in Bookmap. And he discusses his entry and exit below with his criteria for it. So we can clearly see exactly what's going on here. This is above what I do. I just mark, I'm at this location and I put an ellipse there and call it good. He's got, specific levels that he's looking for. So this is great. You love to see stuff like this. Going into that a little deeper at 2 there, and it's going to be very difficult to see this. So pull the image up. It's higher in the thing there, or higher in our chat here if you want to look at it. You can see that bottom right number is a 0, and you can see it kind of scales up very small. This is an exhaustion print and essentially a ratio. And you can see that it's just kind of scrolling up as less and less people are aggressively transacting. So we expect a potential reversal there. We get that kind of absorption as the price can't go any lower. There's just not enough sellers into it. Now, let's take this and look at number 3. It's very hard to see that in number 2, but visually, we can see this in number 3, right? We see that huge band of liquidity there. And sellers run into it, stop initially, consolidate a little bit, and then push down lower, and they just don't make enough headway to break through it all the way. And what do you get? You get that period of exhaustion there. Now, we can't see it because it's a static image, but if Bruce was in the all markets right now and we saw this, we would be zooming in and you would be able to see the fractal pattern within the Bookmap there and see that exhaustion just not really coming across to the bid anymore. And what are you looking for there? You're looking for that potential reversal entry. So he's got his initial long entry there at the break of that kind of consolidation there. And then what he's looking for kind of further from that is, again, Stephen, if you look at this, you get that strong impulse, then you get a small pullback. This is essentially a flag pattern. It's a little bit more horizontally wider than you would typically want, but it's that kind of impulse pullback. You get that higher low there, and you can
Which
see,
one are you talking about, Jack? This one here?
Yeah, that
Okay.
one right there going to 4.
Okay.
And then you get that support of that temporary liquidity there. And he's highlighting that. His expectation as he gets to that liquidity is that that liquidity is going to help support price that aggressors are going to have to push down below that 4 level. And if they can't, we're going to get continuation. And this is some of the great things. If you're looking for a potential mean reversion kind of trade, this is a great image to kind of look at that, right? Because you get that rejection of that large liquidity that tells you there's not an appetite to potentially go lower straight away. Maybe later, but not right now. You get that push to VWAP, kind of a little bit of a trickle back down, and then that support. And you want to see that support come in. And once you see that support, you get that push all the way directly right to VWAP, right? That's a great target location. And then what are you looking for from there? Potential continuation. You're looking to break VWAP, test that upper high, pull back, get some consolidation on VWAP, and potentially go a little further. And if we go back to the footprint chart, we can see on the higher time frame, that's in fact exactly what we got. We got a great setup long, got VWAP confluence, got a nice trend. And what is he doing? He's just kind of running with it. And as we go down to number 5 here, we can see again on those higher time frames as he's kind of zoomed out a little bit here, you can see where he's taking his exit. The initial exit is that to the left. Yep, you can see it to the left there of 5. It's that previous swing high. Sorry, a little higher there, Bruce.
The exit, right? Yeah.
Yeah. The one to the left of that. That exit matches where his previous swing high is. Love this. That's where I look to exit as well. I call this a break of trend resolution. That's one of the kind of names that I call it in my strategies. So when I see this, it stands out to me. So you really get that kind of confluence there. Then you get that final exit at 5 with his initial stop, and he gets kind of stopped out. Now, one of the only critiques here is kind of very situational, depending on the risk appetite of the trader. I probably would have left my stop around VWAP. That's really the last area we had a really good test and kind of projected continuation. He moved to stop up more aggressively off of that swing low, kind of around that 5 area. There's nothing wrong with that. You're locking in good profit there. If you don't necessarily think the trade's going to go much further, there's absolutely nothing wrong with that. I probably would have kept it around VWAP and then just kind of seen if we got more continuation for the day. But overall, really great job here. Really liked seeing what we saw here. I don't have any questions. AJ, you're typing here, but I also see you in the voice chat. Would you like to say something? While he's getting set up, Bruce, do you have any comments? I really like this trade. I thought this was fantastic.
Yeah, I mean, I like what you're. I'm not much on VWAP to be honest, but look at your. I mean, it's just so visual. You got all this liquidity, and I also like that he gets partially out here at the swing, reduce that risk, and then and again a partial. But you make a good point on the VWAP, because look at the support under here, well,
not just that, but look at to the left, you got the previous consolidation. So VWAP kind of basically lined up, like the volume kind of brought it to where everybody was trading already. Right. And on trend days, you'll see this kind of a lot, right? Like you'll see that it's kind of where everybody was trading on previous. No worries, AJ, you can type if you want. You'll get kind of those kind of confluences. And that's what you're looking for, right? Like, so that's when I say VWAP, that's the last place that we had a really good consolidated test. So that's kind of where I would have left it a little bit. But again, though, there's nothing wrong with taking it off early. We're talking 10 points here. Maybe you don't want to give back 10 points. So again, there's nothing wrong with being aggressive with stops. I do that as well. So it's just situational. I don't have enough context in the market conditions for the day to necessarily say which one I would have done. But looking at it, that's kind of what I saw initially. But yeah, this is a fantastic setup. I really liked this.
Nice. Okay, so yeah, thanks, Jack. I think we'll move on to Stan. And Stan's going to go through a few here, and we'll start with Shark Baloo.
Yeah, perfect.
Hey,
Hello.
Stan.
So yeah, overall, that's a great trade. So I was just maybe thinking about highlighting a little bit more the order flow, like for example, for the first shot, like he took, I was wondering to have maybe more liquidity on the offer, highlight the exhaustion, maybe on the pullback. So as we can
So
clearly see on the
in this
opposite
area
side.
here, Stan.
Yeah, exactly.
Okay. Yeah.
Exactly. So yeah, I would like if we compare to the long side, there is clearly a huge difference with liquidity, like and the conviction from bias just after, like Jack I think covered it just before. But clearly bias step in with conviction. They were adding like high liquidity, and plus it was following your setup. And I think it's where Bookmap can really help you. We can clearly see like the heavy liquidity beneath, like just becoming darker, and give you the edge that I'm thinking.
Yeah,
But
I agree with you, Stan. I mean, very much so in the sense that, like, I mean, I know Shark Blue is looking at structural trades in here using, POC, VWAP, etc. But this is a lot of chop here around those areas with not too much understanding which way it might go. And what can really help, and you can get a lot more out of Bookmap, is exactly what Stan is saying. If you saw maybe high liquidity up in here, right, and the high liquidity in here, coming down, and then you also saw exhaustion on the way back up, and then big selling coming in, it's really telling you it wants to target here.
I agree.
exactly.
I agree. I think that there's so much chop in the initial part of the image that this is a tough short to necessarily jump into straight away.
Yeah, it looks this. I stand. I mean, spot on in my opinion. I mean, like, look at the move down into high liquidity away from this area, and then there's a lot of buyers who want to move it right back to this area. No question about that. And there's conviction there. And like you were saying, and then look at the book under here. Look at the book under here, and look at all this buying. So that's where I think Bookmap can aid you maybe a little bit more, instead of looking at I mean, the lines on the chart and looking at your structure is great. If you can add maybe a little bit more in terms of liquidity, you might get more out of it, or order flow and transactions.
Yeah, exactly. And we can see like he's looking at one setup or two, like the 1, 2, 3 top reversal or bottom reversal, and we can clearly see like how Bookmap can help him with this strategy, and what can give him like maybe more edge, more pertinence.
Yeah. Shark Blue is he's in here, so if you have any comments, or have the mic on.
I absolutely agree with what you guys are saying. I'm looking at the structure, and I want to find confluences to add to that, and the resting liquidity has been really confusing for me to wrap my head around. Your Monday, Tuesday, Friday thing is really helping with that, Bruce, but it hops around so much. It's been very confusing to get a handle on. I'm starting to understand it a lot better, and trying to lean on it as a confluence. But I do see, like, there's none there on that short, and there's a bunch here for the long side. That was an interesting day. It was just ping pong, up and down between two flat levels.
Yeah.
The whole session.
Yeah. I mean, I get it. It can be confusing. Keep going. Keep marking them up.
Will do. I appreciate the advice, Stan and Bruce and Jack. I'll definitely work on that. Like I said, it's the resting liquidity just made no sense to me not too long ago, and I'm really starting to wrap my head around it, or I feel like I'm starting to.
Excellent.
Amazing.
Let's guys, I want to we're going to do these weekly. So we have a lot more images to go through, but we only have about 15 minutes, and that makes it an hour. I want to try to cover these in an hour or less. We won't rush. We'll go through it in some detail, but we're going to go through it a little bit quicker here. I'm sorry. This is not Shark Blue. This is
CMG.
CMG. Yeah. Sorry about that. Let me fix that immediately. And then the last one was who is that?
Rob.
Rob. Okay, I did get Rob's on there. Okay.
Yeah.
Great. Okay. Take it away, Stan.
Yeah, so I think it's a very great trade. Like he knows what he's looking for, like by his entry, and he knows where his stop should be. He didn't move it. He was like really confident with his trade. So we can clearly see like he highlighted the microstructure. We had the conviction. I would just suggest maybe to point off more order flow in those microstructure. Like for example, we had like a ton of exhaustion in there. And then seller came with conviction where you took the short. And then perfect scale, at VWAP, front of liquidity. Yeah, for me, you have it. I would just suggest maybe to have more liquidity on the offer, but still, due to the huge amount that we had on the bid, it might maybe not seem clear enough. Then we had those liquidity.
Yeah. I think it's kind of similar, maybe to Shark Blue in the sense that I mean, you've got this, you got your migration here, and some of these, you got your POC, and I guess this is mid, or
that was actually the overnight VPOC.
Oh, okay.
The full session VPOC.
The green one.
Yes.
Okay,
yeah.
Got you.
So you can ignore that one. Yeah.
But it's coming back up to a previous one. So
right.
That's actually like something I mean, I know you're looking at these structures, so that's great, and I totally agree with Stan. I mean, we really want to understand liquidity in here. I mean, it's the orders that move the market, and the transactions within this structure and the order flow inducing the moves is where you can get that additional insight, just like Stan said. There is a few things in here that work really well with the structure you're looking at. Here the sellers come in. You can see that here as well, right? So now you're getting retest back up here, and it can't get back up above, right? So this is nice. These sellers remain kind of in control in this move here. And a retest back down to here looks pretty good, and maybe it can get back down into this liquidity here, and it did in this instance. Yeah, those are my only comments.
Right. Okay. Yeah. The trade was supposed to. The initial target, as you see, was VPOC, and I just gave it a little more room because I was just looking at how it was. Not really being able to push back up. Sales were still in control.
Yeah, so I mean the VPOC is here, right? So you took some profit initially here.
The initial profit was at VWAP.
Yeah, above on the left.
Here, right? Yeah. Okay. Reduce some risk and look for trying to hold for more, which we did, and you moved it down. I see to there. So real nice on that. Real nice. Front running it as well. Great, because this is a pretty strong move here. You don't know what might occur down here, if it's going to trade into this or not. So nice exit on your runner.
Thank you.
Yeah, that was a good one.
Stan, anything else?
No, that's a good one. But for everyone, I would suggest to highlight more what happened in those microstructure. Like understand why. Yeah, just the context of in this microstructure. Like I think most of newcomers are just looking at market profile or setup from Tom B, for example. But really looking at those exhaustion, absorption, conviction from one side or the other side.
Okay.
Yeah, understanding the liquidity can really help you.
Mm-hmm. Mm-hmm.
That's my thought.
Yeah, I totally agree on that comment. All right. Well, thank you, CMJ. Thank you, Stan. Let's move on with Rob.
And so yeah, I know Rob. I think you were speaking with Jack a little bit earlier. But this one, yeah, it's a good one. You properly highlight all the microstructure, and you understand why you should maybe put more intention to the fourth one, the last one, than you really highlight. And still same comments, but what happened in those microstructure, like we can clearly see with those the other consolidation, like sellers are losing conviction on the last one. So
Which one, Stan?
I the on the top, the last one.
The last one up here
Uh,
on the right.
yeah, the one he was highlighting.
Here.
Yeah, exactly.
Okay.
Yeah, we can clearly see like so sellers had conviction to go lower, and then they lose conviction, and compared to others, like it wasn't. Yeah, yeah, exactly. Yeah, we had the liquidity compared to the others too, and that's what you should, for me, highlight. And yeah, like
Really good
keep
comment.
your eyes working on.
Yeah, really good comment. In fact, this looks like a spoof to me. And a lot of I'm not sure what's going on at this hour here, but there's a lot going on in the book here, no doubt. You can see a line here almost
Yeah,
where everything kind of shifts and changes. And this is pretty indicative of a spoof here. You see 1, 2, 3 layers of liquidity in here, and the reaction to it is buyers. They're going to target this, maybe you can get up into here.
yeah, exactly. And it's clearly what was missing from the other consolidation, and even like the sellers' conviction in those other were like there were more sellers.
Yeah, yeah. Rob, do you have any questions or comments? Got Rob in here. I guess he needs a mic. I can turn it on.
Oh, is
okay.
it working now?
There you go.
Yeah,
Thanks, Dan.
Oh, okay. Yeah, that all sounds pretty good. This particular screenshot, I oh, I forget what day this is.
should be the 1st of January.
Oh, okay.
The second, maybe.
Yeah, the first that you post for January.
Yeah, I think I took this one screenshot and then I was going to go back later in replay mode, but to get some closer up stuff, but then had some technical issues, couldn't get back into replay mode.
Yeah. Lots of stuff on here, Rob. I mean, do you want to, what's helping you, or what are you kind of gravitating toward? That's giving you clarity.
Well, something I have a hard time with is the pullbacks, because I'm not sure, how far can it pull back before I have to just give up on the idea that it's a flat pattern. or it's continuation.
The
Yeah,
short,
because some of these they pull back real far. The first one
yeah.
at the bottom there.
Yeah, I mean it's kind of in the answer is kind of in the flag pattern here in the learning center. If we go here, it is the concept, and it is that we're leaning on just get it going here in the measured move. Yes, so we're leaning on all of this here. Hold on. All of this in here, and then we know that there's some sellers trapped in here. Now this is at the open, but like there's some back and forth in here. Now we're looking for this steep impulse move, strong relative volume. Do we get it? Yes. That's what we're leaning on. So then the pullbacks will likely come into maybe these pockets, and we're looking for kind of a shallow pullback. But once we can lean on these things, kind of like the criteria Crash was talking about, it's the same idea of the checklist. The key though for entry after the pullback, and it doesn't, and nothing is 100%, but you look in here for those buyers to come in after this in here. So it comes in here, especially if there's high liquidity in here. Fantastic. Let it trade into it. It's just going to be a trap. You'll see the buyers come in with conviction, and then look for them to really pick it up and to match the kind of volume pressure over here. So that's the short answer, Rob. I don't know if that helps you, but because I know what you mean. If you look at some of these areas in here, like, well, it's kind of hard to see who's in control. There are a lot of sellers, a lot of buyers, a lot of sellers, a lot of buyers. When who's winning this battle, or when is it going to kind of turn? And look for that conviction. And maybe this isn't the clearest image. Maybe this looks pretty good in here. Like this is where it looks like it wants to pull away. To me.
Yeah, me too.
Yeah, I can see where you have those first three green dots after that purple rectangle there. We can see that volume come in, and then it shoots up.
Yeah.
Right after that consolidation.
Yeah, and in fact, it's kind of rounding itself. You got your trend line here, which is great, but it's taking its time, to kind of figure it out in here, and it is kind of hard to ascertain. I think the key is somewhere in here, and then maybe that conviction is in here.
Yeah, and I have a rough time with those entries because where you just circled, where you start to see the volume come in, I might make an entry somewhere around there, and then we can get a bunch of back and forth. Like
True.
today, I really got whooped pretty good when I was trying to do some, where I'm getting in closer at that top of that range, and then it continues to go back and forth and back and forth, and then up.
Yeah. I would suggest, like I was earlier, this is what you want to lean on. Is this a lot to lean on? It is, maybe if it breaks it.
Yeah.
So maybe this is, maybe you're looking for pullbacks in here now. You know what I mean? So make sure you have something that look back and think about, like, are buyers in control? Who's in control? Who's out of control? If out of control, meaning that these guys are going to have to cover. Where are they going to cover? Well, they're going to cover nicely up in this area.
Yeah, and I was trying to use that trend line to give me some idea of when things are changing, and you have some of that liquidity down there in that big wall, and it's getting filled.
Yeah, absolutely.
So I figure, that's got to be bringing some buyers in. You see all that absorption, you see more orders getting pulled, so some of that must have gotten filled. So I figured, this looks like it's going up.
So one thing you could also look at, it's kind of more of a elementary kind of style in general, but just to be on the right side of things, because you want to be cautious in general. That's just kind of how you're approaching things, and there's nothing wrong with that. When you get that break above VWAP, a lot of people will look at, if I'm above VWAP, I'm only looking long. If I'm below VWAP, I'm only looking short. And this keeps you kind of like on the side of wherever volume is. It's not perfect. It's not the greatest, but when you add Bookmap and the order flow elements and you're looking for that, if you did that, it would take you to that flag pattern right at 8:15, and you would have been in basically where Bruce probably would have suggested. Now, if you do something like that, make sure that VWAP's location makes sense to you. If you look at where it is at 8:15 and you get all that trading there, if you look to the left at 7:15, you've also got all that trading there. Now this is 10:15 market time, so we've had a good impulse move from the open, things like that. We've had a lot of volume. It's not right off the bat in the morning, so there's a little bit more support to where that volume is trading and where things like VWAP and the volume point of control are, because you've had so much longer in the market at this point. If you were to like rip this, at 8:45, it's a different beast altogether, which is one of the reasons why Bruce and I don't necessarily use VWAP often, but it's good in Confluence, right? So that's one thing that I would look at maybe for you, Rob, because you want to, like Bruce said, you want to like simplify a little bit. You want to kind of like where is a good spot for me to be looking long, looking short. You got all your setup here. That's a little late maybe, and he's right. So maybe that little bit of Confluence, and then from there you can kind of get more experience, more screen time, and figure it out for yourself if you want something more or less. So that's kind of what I would suggest.
Yeah, I hadn't really considered VWAP when I was looking at this particular one, but you can see where VPOC shifted down, and then VWAP's above the VPOC, and then VPOC shifts up again.
So I'm very different when it comes to a lot of these levels. I don't necessarily dislike them or like them, but I look at them and I want to have an expectation of what happens when price gets there. And I think that that's kind of way more important than VWAP doesn't work, VWAP does work, VPOC doesn't work, VPOC does work. You don't need to be in the argument. What is your expectation if price gets there? Did it meet your expectation? If so, continue the trade. If not, well, then get out of the trade, that kind of concept. So, and I do that not just with VWAP, I do that with liquidity. That large band of liquidity that we see down there, if we don't transact through that, and then I get a higher low, I'm looking at entering this market at probably 8 a.m. on this chart, as opposed to waiting like you necessarily would have. Mainly because for order flow, I'm seeing everything I want to see to not be short in this market, and I want to be long. But again, that's different risk profiles, different trading styles. So just maybe a little bit of Confluence there is all you really need, but really good overall order flow stuff. Great job.
Oh yeah, I kind of see the that third dip towards the wall down there.
Yeah, exactly.
It's not making it past there. So
not only is it not making it past there, not only is it not making it past there, but look at volume. Volume coming down this time is significantly less than it was the previous two times. So when you've pushed down and then on a lot of volume, and then you didn't make it there or you didn't make it through, and you get that pullback. Then you push down again on strong volume and you didn't make it there, and you get that pullback. And if you push down again and there's just not that volume there, that's potential for a really big counterparty group to get momentum in the other direction. And really that's what you see. And then from then on, it's just green orbs pretty much all the way to the top. So that's kind of like, that's more of the order flow elements that you're looking for specifically in this particular location. And I look at that anytime I have large bands of liquidity. That's what I want to see essentially. And you can also see this in market pulse volume pressure.
Yeah, I think that I could see how that could fit into that pattern I'm working on.
Yeah, right now, like you've done a great job simplifying your approach, finding the thing that you see the best, and then leveraging that thing, and then from there you can expand out. So you've made huge improvement, and I know Bruce has mentioned that a couple of times. So really good job, though.
Oh, thank you.
All right, let me move on to thanks, Rob. And we'll go over more tomorrow during the All Markets webinar, and maybe we'll kind of focus on leaning on previous activity. It's so important. So we're not looking at this myopic little view in here and this little move and that little move, and then it goes down and then it finally goes up. How do you know? Well, we need to look at all of this in here. Then it makes it much easier, in my opinion. So anyway, we'll chat more tomorrow about it. Let's see. All right, so I've got Slowdown put some great images together here, and so let's go through that. And thank you, Slowdown. So Caesar, I don't know. I mean, I think you've got all this text from him already. Some gems in here, some really nice feedback in here. Now he's taken these points and he put them onto the chart for you as well. So here's number one here, yeah. So it looks like you got long in here, and you're waiting for it to kind of continuation and the buyers to break in and come in and then move on up, and then it looks like you then you tell me, but I believe then maybe you added into it here in this area in here, and Slowdown is talking about your risk reward in here, that how you, I mean, you're looking at 1-to-1 here and then 2-to-1 here, and then adding into something. Now if you're scaling in and that you're going to take a small position here and then maybe another small position here, kind of looking for a turnaround in here, then that's something different. But yeah, the kind of risk reward is something to definitely keep an eye on in here. So anyway, let's see. Yeah, we have some high liquidity in here, which is nice. And as it comes back down, it does trade through it here. And then we get back up above it. Now we're looking at a stock here. We're looking at Microsoft. So it acts a little differently than some of the futures products. But anyway, we trade through it, but we get back up above it here, and you can see the bid in here. Kind of goosing this a little bit up into high liquidity in here on the offer. But anyway, what Slowdown had mentioned in here, yeah, that should have held until your R3. You're looking at your pivots in here, and matching with the high liquidity is a good thing. You've got the order flow here in Bookmap, and as Stan was mentioning, use it. You'll get an edge by understanding the orders in here and the reaction. I mean, it's all about orders. Market's made up of them. So anyway, this is, I know you're new in here. Welcome to the Academy. We'll go through a lot more. I mean, Slowdown has quite a bit in here that he covered. So you might want to take a look in further to the some of the feedback that he's given here. Okay. So I'm sorry to kind of go through it so quickly. Alan, also in here, some really nice comments in here with looking at, yeah, I have some my own comments in here as well, but seeing the buying interest starting to come in I'm moving this back up, and they're interested in higher prices, right? So and then number two, we see an instant reaction from buyers after picking up stops at the VWAP and the previous swing, down in this area in here. So down into this area, you can see VWAP is trending up, right? So we can't see what's over in here. VWAP is trending up, and then he said you're being patient, you're waiting for that conviction for these buyers to come in and present themselves. That's when you're looking for the momentum move to start to unfold here. And then he also really likes how you're holding here. You're looking for the taking into account the speed of the move to try to maximize your profits here, leaning on staying with the dominant side of the trade until it proves otherwise. So really, really great. This is a big, I know you've been covering stuff like this, Alan, but I totally agree with slowdown in here. Your notation is becoming clearer. What you're looking for is becoming clearer, and you're really starting to understand momentum. That's really great. This will should make a huge difference in your trading. Starting to understand when that's picking up, and then how to stay with it as well, because you're looking at the vertical moves in here, which is fantastic. You're looking for that conviction and then going with it. Now, this was a mean reversion, you said in here on the, I guess on a higher higher time frame. Doesn't matter. The momentum is in here in the buyers in this image, and man, keep going, stick with it, and you've got. It looks like you're finding your way on what it is your strength. So I'm sorry, guys. I'm going to have to kind of move on. Can't open the mic here, but wanted to. Because I want to wrap this up for everybody, because we're going to do this weekly. All right, so we got a lot of images in here. And next one, DNT Matter. He makes a comment in here about nice idea in here. Like you've got kind of creativity using two subcharts in here. One layered upon the other, so you've got duplicate images, or you're using the symbol duplicate and adding that extra sub chart pane in there, which is nice. Really clean notation as well, which I totally agree with. I really like the comment from Slowdown about that, that the cleaner it is, the more time you edit and hone it, the more you understand exactly what you're looking at. And then you can start to take away things and then focus more on other things. So let's see, what else does he say here? Yeah, some interesting divergence, not something on its own, but is necessarily actionable, but perhaps a caution if you're looking to join what could have been viewed as a trend higher out of the open. Iceberg skew, CVD, skews the CVD on both sides though. So yeah, anyway, I can see the you got your CVD in here and your divergence in here. Yeah, if that's something that a confluence that you're looking for all the time, then excellent. I myself am kind of careful with it. I've been burned so many times by it. And the order flow is usually, I find, much more reliable. But you've got your way of trading. The nice use of the absorption market pulse tool in here. I really like that. I know that you were playing around with it, and glad to see you get some really nice use out of it here. It's very clearly telling you some things up in these areas here. So yeah, keep going. DNT, I would say another thing in here. Oh yeah, he also mentions in here, like, really good to see your kind of little synopsis up here what you're looking for. Also, Jack had mentioned the same thing. Another thing too, like, you keep going. You're just kind of bouncing on this cusp of making it into the Bookmap Academy. Need to see more images from you, and it doesn't have to be too detailed, but just further your trading through journalizing. Crash has made it through. He has really journalized a lot. He's found his own strategy through it, and now he's just going deeper and deeper into it, more confluences, etc. So I would just recommend to keep with it and do more if you want to get more out of it. So anyway, that would be my comments here. So you can reach out to Slowdown, any of you guys, for further summary of or in details on what exactly he was talking about. We got Caesar, you're new in here, so welcome, great job. Alan, you're getting to me it seems like you found something you really like, which makes a huge difference. And then D&T Matter, also honing your strategy, getting better and better here. Guys, that's everything. That's all I have for you. If there's any further questions in here, let me take a quick look in Discord. No, I think so. I think we're good. I don't know if D&T is in here. Oh yeah, he is. Okay. Yeah, I'll reach out to you. Okay, yeah, no worries. You just popped in. Yeah, I'll reach out to you, D&T, and we'll go through some of the details. Anyway, guys, thanks so much for coming. Thanks, Stan. Thanks, Jack. Thanks, Slowdown. And thank you, guys, traders here. We'll do it again next Thursday. We'll see you then. Okay? In the meantime, take care. And yeah, keep journaling. Keep going. In fact, keep going right away so that we can cover them in the next meeting, not like the day before. We won't be able to get to them. It takes a little while to give us, we need some time to give you guys some coaching. Okay? Thanks, guys. Take care. We'll talk soon.